Hello, everyone. Thank you to our early birds for hopping on a bit early. We'll be kicking off in about 8 minutes. For those of you who are on early, just want to let you know that you can use the Q&A features and the chat features to post questions, because this is really intended to be a truly interactive session. So please do feel free to use those and explore if you're not familiar with the tools already. It's just so like I said, we'll just be kicking off in just a minute. Hopefully everyone can see my screen. If you can just confirm that you can see my screen. Oh, I got a bit of a typo. Jim won't be joining us today. Early birds get to see my errors. Like I say, if you're not familiar with how to use Zoom or haven't used Zoom before, you'll notice that there is a panel that pops up with Zoom. On it, you can control your audio sources as well as answer or post any questions to the Q&A poll, or use the chat feature as well. If you love to see if someone could post something to the chat, that would be great. Just to confirm that we're all working on it. So Bill, thank you, appreciate that. So we can see you were able to get on it. And if anyone has any areas they want me to focus on today, thank you, Stella. Please feel free to, again, post that either in the chat or the Q&A, and I'll do my best to focus on those areas. Again, a little bit of a precursor for those of you who were on earlier. You probably are aware that some new programs were announced today for some rent subsidies. We will talk about those briefly. But I would imagine that the big one that most people want to know about for our clients are the emergency bank account, CEBA, and the emergency wage subsidy, the CEWS, as well as the temporary wage subsidy. So we will be trying to dive into those a little bit deeper today, and answering any questions around those, but we'll do our best to answer any questions at all. So we'll be kicking off in just about 4 more minutes here. Just getting this live on Facebook here. And Dad, I do see your question. We'll follow up with you probably directly afterwards because I don't think the homeless benefit is really something beneficial for all the participants here. Okay, we've got just about 1 more minute to go. Okay, so I think we are live here, hopefully, in just about 1 second. Yes, we are now officially live. So thank you everyone for joining us today. This is intended to be a Q&A session around the Canadian Economic Response Plan and specifically the programs that have been launched for small business owners. So there were some new updates this morning. Trudeau did announce they've got some new plans available for rent relief. We will be talking about those briefly today, although those are still relatively early days on that. But the big thing I think that we've been getting a lot of questions around are the wage subsidies and the fact that you're going to now be able to apply on Monday. That seems to be a hot topic. So we figured now was really the time to open a Q&A program. So the most important thing I want those of you to know is that we have Q&A available for those of you who are on the live webinar via the question and answers section of Zoom as well as the chat. So I will be monitoring those, and I want everyone to take a minute to look around their Zoom panel to make sure they know how to access the Q&A and the chat sections so that we can keep the dialogue going, because I really do want to make sure that this is as much about your individual needs and questions so we can get through those, because that's the purpose of today. Of course, I will be doing an overview. For those of you who are watching live on Facebook, if you want to post your questions in the discussion, we will circle back and I'll get to those and make get, I think Jose and Rachel are on our call. Let me just check my attendees for 1 second. Rachel, if I could get you to just post any questions that come through Facebook into the chat as well, that would be very helpful. So let me kick off a little bit before I open it up for the Q&A. A little bit of the agenda. We're going to talk obviously today about the Canadian Economic Response Plan, a little bit about the support for individuals, but really about support for businesses. And we're going to spend the meat of this really as Q&A. So we want to hear from you guys what your questions are. So please feel free to start posting those into either the chat or the Q&A right now so that we can get to those and answer those questions for you. So looking at the Canadian Economic Response Plan, The one thing, oh, sorry, before I should tell you, for those of you who aren't already familiar with us, who aren't our clients, tell you a little bit about our background and why we're talking about this subject. So we are a chartered professional accounting firm based here in Toronto, specializing in small businesses and with a very strong niche in the independent contractor market. We've been in business for over 30 years, founded by my father. And as I said, we specialize in independent contractors and have been doing that since 1984. We're also an ISO 9001 registered firm. We have developed a new Facebook group specifically to answer questions around the COVID-19 benefits and programs that have been put in place. If you're not already connected with us there, I encourage you to log on right now and join the Facebook group. We do daily updates there with all the Prime Minister's speeches, any new and important updates. We are not sending daily emails because this information is changing so rapidly that we don't want to be inundating you guys with information that may or may not be relevant. So we're posting all of the updates to the Facebook group, and as big, large updates come, we are posting periodic emails out to the client base. If you have a specific question around COVID-19, we have set up a specific hotline email called at covid19@cpa4it.ca, where you can send all your questions. Your account managers, we are making sure to brief them and update them as much as possible, but it's really been my job to stay aware of all the constantly evolving and changing needs. So I'm the primary contact, and we want to try and funnel this in a way, because we are providing this support for free in a way that we can handle it and manage it as effectively as possible. So we're not answering the same questions over email over and over again and not having to charge you guys for that time that we're spending. So I'd appreciate it if you do have questions. Please use our COVID-19 support email, which is covid19@cpa4it.ca. So without further ado, I want to share with you what is a pretty important link. This is, sorry, the link here. I'll post all of this in the chat in just a second as well. So this is the link to the Canadian Economic Response Plan. And I'm going to be looking at that site to go through the specifics, because it's a great site. There's a ton of information. This is trusted resources coming from the government. This is where you want to go if you want to learn about the different programs. The number one problem that we do have is we have limited amounts of information available to us. And the hard part for us as a firm has been that we know that we're getting a lot of questions and people want definitive answers, and we're doing our best to provide those. But unfortunately, we ourselves don't have those, and even CRA themselves don't necessarily have all these answers for us. One of those big issues is around the non-arm's length employees, which we will be talking about in a second. So the support for individuals, this hasn't changed significantly in the last few weeks since the last webinar that I did with Jim Harris on the topic. The big thing that has changed is with the CERB. There have been some changes in who is available, as well as the amount of income that you can make. So they have made some changes to that program, allowing people to be able to have up to $1,000 a month in income and still qualify for the CERB. So that is the maximum amount of income that you can have and still be eligible for the CERB. So this is important to know and be aware of that. And of course, the child benefit still remains, the goods and service tax credit, the extra time for filing your returns, the mortgage support, you know, all these changes have not fundamentally changed with the exception of the CRB. So where we have been seeing a lot of updates and a lot of changes around the support for businesses, and particularly around the wage subsidy. So I'm not sure how many people are familiar with the work sharing program. It's not really all that relevant to our client base, so I won't talk too much about it unless people have some questions. And the big thing is the temporary wage subsidy and the Canada Emergency Wage Subsidy. Thank you very much. And now, as of today, the announcement for the Canada Emergency Commercial Rent Assistance Program. I'm going to start there because I think that this is the latest information. What this is it is a loan that is potentially forgivable for up to 50% of the rent cost to landlords who are willing to reduce their rent by at least 75%. That means that businesses that have commercial rent are still obligated to pay 25% of their rent, but landlords who do reduce their rent by 75% or more will be eligible for the forgiveness of this loan, which will be up to 50% of the rents. So effectively, the government will pay 50%, the landlord will pay 25%, and the small business owner will pay 25% in this new program. Again, just announced today that all the provinces have worked together on this. Still lots of details to be hammered out. They'll be coming out even as we speak over the later today and over the weekend. So this is a constantly evolving area. Now, we also have some access to credit. The CEBA is the big program that most of our clients are applying for. And that's a really straightforward program. It did start out originally, you had to have more than $50,000 of payroll in 2019. That has been reduced down to $20,000. If you have more than $20,000 of payroll in 2019, and that's payroll meaning a T4, not dividends and not T5. So if you have a T4 in 2019 from your company, or your company has issued T4s in 2019, that are more than $20,000, you are eligible for receiving the loan. Now, the debt forgiveness on this is up to $10,000 or 25% of that $40,000 loan. Now, in order to qualify for the debt forgiveness, you have to have spent the money on non-deferrable operating expenses, and you must have repaid $30,000 of the loan by December 31st, 2022. So just short of 2 years to be able to repay that. Now, bear with me 1 second, just because I know Rachel is asking me to make her a co-host here. So I would like to do that for her. So just bear with me 1 second, because there are a lot of you on this call, and finding her is not that easy. There she is. So thank you, Rachel. I think you are hopefully now a panelist. Bear with me 1 second, guys. Okay, so these are the joys of doing live webinars from your home with kids running around who are clearly on a break. I can see that we've already got some questions. So why don't we see if we can open this up to some of our Q&A. We've got 4 questions posted already. So why don't I start with some of the Q&A, and then we can dive into some of the tools and programs that are available for helping you figure out some of these answers. So the first question we have is that the temporary wage subsidy of 10% reduction in payroll deduction, is it available for employers who've not been affected by COVID-19? And is it available for businesses where the employers are the only director and the spouse of the director? The answer to that question is yes and no. So you do not have to have a reduction in income in order to qualify for the temporary 10% wage subsidy. However, there are specific rules that apply for both the 10% wage subsidy, the temporary wage subsidy, and the 75% wage subsidy, which is the emergency wage subsidy. And that is with non-arm's length employees, which are owners and family members of owners. You are limited to the weekly payroll from the same period in 2019. So you can not pay yourself any more than you paid yourself last year. So they're trying to get away from people who are paying themselves or trying to pay themselves more to take advantage of these subsidies to get more money out. So that's why that was put in place. Now, the hard part that we have in this, and this is the big question that we've been asked over and over again, and that unfortunately we don't have an answer. And I know some people have asked for us to get advanced rulings on it, which we are, I promise you, we're trying to do our best to get those advanced rulings. We, as of yet, do not have those. And the hard part is that, unfortunately, the CRA agents are basically going off the same information that we have at this point. When things open up on Monday for applications, I suspect is when we will start having a lot more information available. The application process should provide more insight into whether we can take the annual payroll, divide that by 52, and consider that the weekly payroll amount. So my number one feedback for anyone who was paying themselves annually is that you should probably switch to monthly payroll going forward as soon as possible, and that I wouldn't be a rush to be the first person to make an application on Monday. If you're in need of funds, the CEBA is the place to get your funds right now. I would wait until we have a little bit more information before I apply, because the important thing to note is that they've made clear that there will be penalties for anyone gaming the system. They haven't made clear what gaming the system is, but the penalties are going to be 25% of any benefit that you receive. So that means if you were to receive a benefit of, for sake of easy math, $10,000, you would have to repay that benefit of $10,000 plus another $2,500 in penalty. So that's why we are not encouraging people to rush and beat down the lines and be the first person to apply for the wage subsidies on Monday. We're hoping that on Monday, when we can begin the application processes and we can look into the process a little bit more thoroughly, we may have some more answers. So the answer to that first question is yes and maybe. So we got another question here, which is that you'd recommended people who pay source deductions start paying source deductions monthly. I guess this is related to our last question. At the time when everybody is trying to conserve money to start paying source deductions monthly, starting to pay source deductions monthly will be drained on cash flow when the source deduction is only due in January of 2021. Since the deadline to apply for this is September 30th, 2020, and the financial year end for my company is later on, will it be cleaner if I claim this when I file my corporate tax return and I prove that my income reduced through my financial statement and also prove my payroll? Yes, I would tend to fundamentally agree with, if you don't absolutely need the money, I would defer making the claim. Should you defer switching to monthly payroll? That is certainly something that you're going to have to decide on a case-by-case basis as far as your individual cash flows. I would hope that with the CEBA, the Canadian Emergency Bank Account, available to you, that would give you the funds to be able to help manage cash flow a little bit better. And with that CEBA, you have effectively 2 years to demonstrate that you had $40,000 worth of non-deferrable expenses that money was spent on. So I don't think, there doesn't seem to be anything specifically that says it can't go over here and then over there and then over here. And it's just saying that it has to be spent on this. So you have to spend a total of $40,000, because obviously, as small business owners know, you got to pay off you might have a bill outstanding from a credit card that may not qualify, but you've got to pay that right now or you're hit with large penalties. As long as we can keep track of $40,000 worth of non-deferrable operating expenses. And again, what's non-deferrable? I hate that we've got a whole bunch of questions around English language and what we're going to clarify that, but that is the times we live in right now. So hopefully that answers your question. If not, please, again, feel free to post another one. You had recommended people who pay source deduction and start paying source deductions monthly. Yes, and again, my recommendation still goes on that basis. I would certainly recommend moving to a monthly payroll remittance if you have the cash flow to make that available. Now, this is if you're not planning to make any claims on either of the wage subsidies, not applicable. And so there is a limit also to the 10% wage subsidy. It's not 10% of your entire wages. You know, you've only got about $1,375 available as the maximum benefit per employee on that 10% wage subsidy. And in addition, you do not have to make that claim now. If you make the claim later on, you're still eligible for it. So it's not like it's going to go away if you were still eligible for it. What is the non-deferrable expenses for the forgiveness that you mentioned? If I pay employers' payroll, is that counted towards forgiveness? And again, this is, they've given a couple of examples. If you read the loan details that you receive once you get your loan from your individual bank, there are some examples given. And payroll is one of those examples that is given. But it says not exhaustive, so it doesn't, those aren't the only things that are included. You know, we will be working in the coming days to try and clarify that and try to get some more definition around what is a non-deferrable expenses. Certainly one of the things we can, I have identified and been able to confirm is accounting fees are, software is. So there's a number of things that we've already been able to clarify, but we will be working on a list over the coming months of what is a non-deferrable expense. Now, what is the most important thing to clarify is that does not affect your eligibility to get the loan. That is simply affecting your eligibility for the $10,000 debt forgiveness, which is not going to happen until December 31st, 2022. So we have quite a bit of time to define that and quite a bit of time to come up with that list of expenses. So one of the things is we're going to want to make sure once we define that we have a way of tracking that in our bookkeeping and accounting processes. Hi, I registered with the CERB and getting the $2,000 checks. Am I eligible for the CEBA and the wage subsidy? If so, how will it impact the $2,000 check that I received for CERB? Now, so you cannot receive both the CERB and the wage subsidy because this qualifications on the CERB is that you can't have more than $1,000, and originally it wasn't you couldn't have any income, and they certainly do not want people claiming both. Now, if you received the CERB and didn't have any income but became employed again, you can think of those scenarios where people were temporarily laid off and then brought back. You could stop the CERB and move to the wage subsidy because the 75% wage subsidy, if you would be eligible for it, would be more than the CERB, slightly more than the CERB benefit. So there, you can't have both, but you could certainly switch off of CERB into CEBA, or sorry, into the CEWS, the wage subsidy. Now, there does not seem to be any issues whatsoever that we have seen for individuals who are receiving CERB who are shareholders of companies that are also qualifying for the CEBA. To date, it will not affect your ability to actually get the loan. They're not doing any cross-referencing on that. Will there be any issues down the road? We don't have any answers on that, unfortunately, as of yet. But I don't suspect there will be, as long as you're not making use of both the wage subsidy and the CERB. If you are making use of both the CERB and the wage subsidy, I can guarantee there's going to be problems. You are effectively double dipping in programs. Okay, so we've got a first question here from Facebook Live. So I'm wondering what I'm eligible for. I'm a registered business sole proprietor, self-employed only employee. I'm still learning. I'm still earning more than $1,000 a month, but my income is reduced by 75%. And this is an unfortunate circumstance because you're effectively not, unfortunately, eligible for any of the programs. So sole prop isn't eligible for the CEBA program. There is, with no employees, receiving payroll, you wouldn't be eligible for any wage subsidies, although sole props can sometimes have payroll. But again, for yourself, you wouldn't, and you wouldn't certainly have any historic payroll that, and therefore wouldn't qualify for that based on the non-arm's length rules. And because you're making more than $1,000 a month, you will not qualify for the CERB. So depending upon, I'd say the biggest thing to look at here is looking at what exactly is your business that you're running, what are you generating income for. One of the most, really interesting things is around gift cards. So if you are selling gift cards during this period, that revenue is not actually recognized until the gift cards are redeemed. It's effectively an obligation that resides on the balance sheet, and it's not income until the gift cards are redeemed. So that might be a way of being able to generate and sustain some cash flow without having income that would disqualify you from the CERB. But unfortunately, in your current circumstances, you would not be eligible for any of the programs at the moment. And this is one of the things that this is what the government is struggling with, right? They're trying to create programs to help as many people as possible, but there's so many different scenarios and everyone's got their own individual needs, and people are falling through the cracks. And they're trying to fill these cracks as quickly and as fast as they can. But you know, the reality is they're trying to create legislation in a matter of weeks that normally takes, you know, a year to do. So they're doing their best. Do you have to provide paperwork showing that your expenses for the business loan were non-deferrable expenses? At this point, we don't know. I'm going to assume that there is going to be audits. What percentage of people will be audited on this, I do not know. So one of the most important things is keeping a paper trail of your non-deferrable business or operating expenses. So this is one of the ways that people are doing it. You know, I looked at QuickBooks and Xero as some of the best bookkeeping tools that we use and recommend for our clients. So using classes as a way to do this, to be able to track the non-deferrable operating expenses is a good way. So you should be keeping some sort of list, some way of tracking the expenses that you're maintaining. Now, as a small business owner, you should be tracking these expenses anyways, but the fundamental difference that you weren't probably doing is the difference between deferrable and non-deferrable. So one of the things that, and one of the big things that's obviously not permitted in the for the wage subsidy, well, maybe not, is large new bonuses. So giving yourself a big pay raise and dividends. So those things are things to be aware of. But keeping track of all that and having a way to differentiate between the non-deferrable and deferrable is important. If you're happy to use our CRED manual, then I would just add another column in our CRED manual for deferrable, non-deferrable as a way to track it. You know, do your best. Again, we will have more information as these programs evolve and do our best to be able to keep you guys up to date as we're able to define non-deferrable. And we'll probably come up with a list of items as well as standard chart of account, things that do fall under that non-deferrable classification. We do have quite a bit of time, obviously, before I would expect to see any documentation required on this whatsoever. As a single owner, I draw only dividends, T5, no T4. Is government planning to include such cases under their scheme? No. Unfortunately, this is a significant disadvantage that no one saw coming when you might have been doing tax planning and deciding to go with dividends over salary. Now, the one thing is that they did make a change, which was in regards to the CERB program, and that was really that those of you who wouldn't have qualified for the CERB because you didn't have income and you only had dividend income can now qualify for the CERB. So unfortunately, the only program that would be available would be potentially the CERB. as far as any wage subsidy or anything like that. Because you did dividends in the past and no T4, that means regardless of this whole, annual versus monthly payroll question, you did not have any income in the past to use as an average weekly income as your basis, so you wouldn't be eligible for any of the wage subsidy programs. And again, because you did a T5 and not a T4, that's not eligible for the emergency bank account as well. If not the CEBA, what about the wage subsidy? Mark, I will ask you to expand on that again. I'm not sure I followed the question entirely. But if I haven't answered it already, please repost. Another question from Facebook Live. What are eligible business IT consulting company whose employees are working freelancers and only 2 employees in Canada on payroll? So there are, for the freelancers who are effectively independent contractors, there is no subsidies available for them. For the 2 employees that are on payroll in Canada, they would be eligible for the wage subsidies. Now, they're going to be definitively eligible for the temporary wage subsidy, assuming that these are not arm's length employees. And whether they're eligible for the 75% wage subsidy is now a question of how much revenue have you lost year over year. If you're a new business, you're allowed to compare to revenue from January and February. Otherwise, it's compared against the revenue from last year. It is not an average revenue of the 3 months. It is April's against April's. March's against March, April's against April's, May's against May's. If it has dropped more than 75%, then you are eligible for the CEWS, which is the 75% wage subsidy. Unfortunately, the independent contractors are not. Now, you could certainly terminate the contract with the freelancers and hire them as employees or hire new employees, which would be eligible. If they're not arm's length, you could terminate a contractor, which unfortunately it's not great for the independent contractor market, but you could terminate an independent contractor and hire them as an employee and be eligible for the wage subsidy. What I can tell you is we are doing our best to work with the lobby groups that we work with, like the National Association of Computer Consulting Businesses, to try and get something for the independent contractor market so that exactly what I talked about doesn't happen en masse, where companies just go out and terminate all their independent contractors and then hire everyone as employees. We have not seen any rush to do that as of yet, but given that the fact that the wage subsidy is only opening on Monday, things could start changing as companies start to realize the significant cost difference of maintaining a contractor versus maintaining an employee with these different wage subsidies that exist today. For the business loan, you mentioned that the loan amount needs to be spent on expenses. What type of expenses would these be? So most of the expenses that typical independent contractors would have are going to qualify as non-deferrable business expenses. So all your operating expenses that you normally have count. What they've been very clear is what they're trying to avoid is, like I say, large bonuses, ways of just pulling this out to yourself and taking that out to yourself, using this as just a tool for investments. And it's not that you can't do that. It's just you won't be eligible for the $10,000 debt forgiveness. So things like rent are going to be non-deferrable. Things like accounting fees, things like computer supplies, all those operating expenses that you normally would have, telephone and internet, all these things that you would typically see in our standard chart of accounts for most independent contractors. Those that you find on the income statement are generally speaking going to be non-deferrable operating expenses. As I said, I think We will be doing our best over the coming weeks to try and provide more detail and clarity around that, because we know that the language leaves room for interpretation, and that makes things difficult. And we are trying to do our best to define that as best we can. With the CEBA, despite being pre-approved for it, there is a section in the application process asking for information reported in a T4 summary remuneration paid. What happens if you are a sole proprietor with a single employee who is not required to submit a T4? So the CEBA is not available for sole proprietors. I'm sorry to say it's just not available for sole proprietors. It's only available for incorporated entities. So if you're a sole proprietor, it's just you won't be able to qualify for that. Is the deadline September 30th and October 31st to apply? Is the deadline September 30th is the deadline September or October 31st to apply for CEWS? To be honest, I'm not 100% sure. I haven't heard that didn't stand out to me that there was a deadline to apply. I know certainly with the TEWS, it's not. With the CEWS, I will have to double check on that and circle back to you. But as I understand it, no, there's not a deadline that you have to apply for. It's just simply that it is opening up for the first time on Monday. Could be mistaken on that, but not anywhere that stand out that I've noticed or recognized. Do any of the wage subsidies have to be repaid? No, unless they determine that you weren't truly eligible for them. So as long as you are legitimately entitled to the wage subsidies, they do not have to be repaid. As I did mention before, if you're determined not to be eligible for the wage subsidy, the penalty is refunding and repaying all the wage subsidies you've received plus a 25% penalty. But outside of that, no, they do not have to be repaid. It seems companies are not renewing contracts. For those of us currently not affected, are you saying we should switch to monthly source deductions in the event we find ourselves without a contract? No, not necessarily. I would just say that for those of you who haven't truly been affected, the only reason you might want to switch to monthly is if you do want to apply for the temporary wage subsidy, which is the $1,375 potential credit. Again, we cannot guarantee that's going to ensure you're eligible. We just, my gut feel and talking with other accountants, they sort of feel like if you weren't on monthly payroll and you're not receiving monthly payroll, that could affect your eligibility. If you're not too concerned about it and don't plan to apply for it, there's no need to switch to monthly payroll. Switching to monthly payroll is not by any means, like I said, the be all and the end all. And again, if cash flow doesn't permit, don't make that your top priority. I'd say that if cash flow is an issue, top priority would be the CEBA. And again, the one thing is that with the CERB, that seems to be obviously the most guaranteed source of subsidy. The wage subsidy, the temporary wage subsidy will be the greatest benefit versus the CERB. But again, you're somewhat splitting hairs. It's not significantly different. It is more, but it's also again going to be limited by so many other caveats around what was your average weekly income for this period last year, and is annual going to be annual payments going to count as dividing that by 52 equals weekly? We don't know the answer to that. So if you're absolutely got no money coming in, you got to decide, what's more important to you, the safe bet or the safer bet, which is the CERB, or the, longer term, higher risk, potentially higher reward of the wage subsidy. So unfortunately, you're going to have to make a decision on that individually. what options do you have if you became incorporated in January 2020? So if you became incorporated in January 2020, you're obviously not going to have any payroll for 2019, which means you're not going to be eligible for the CEBA program. However, you would be eligible if your revenues decreased. So if you lost the contract for the, actually, you're not even going to be eligible for the wage subsidy because you're not going to have any historic and you're not arm's length. So unfortunately, the only real option you're going to have in that scenario is the CERB. So that's really going to be the only option available to someone that incorporated in January and has lost, has no income or at least less than $1,000 of income coming in. The last time in your announcement, you had made an attempt to interpret CRAs for non-arm's length transactions. If you're willing to wait for a month or two, since there is no penalty instead of interpreting it, is it possible for you to reach out to CRA and get an official statement from CRA how to deal with the situation, which I am sure. So right now you can't get a, which is what's called an advance ruling. Can't get those right now. I'm sure that we will be, and there will be more information coming. But again, I would certainly agree with you that if you don't absolutely need the payment, the check today from the government, then I would hold off in applying. I wouldn't apply on Monday because there are a lot of questions in the air, and there is a potentially a 25% penalty if CRA says that an annual payroll does not count as, cannot be divided by 52 to determine your average weekly pay. Like I said, we will be doing our best. This question has come up earlier that people would like to see an advance ruling on that. We do not have that today. We cannot get that as of yet. But we are working our hardest to try and get that. The best thing that you could get would be to call into CRA, speak with a CRA representative who will give you nothing more than their interpretation, which is as good as my interpretation or as good as another accountant's interpretation. It's still just an interpretation. It's not an advance ruling. It doesn't hold any weight, unfortunately. And we've got an email question coming in. I've just set up my business in 2019 and I'm late in preparing my T4. Can I prepare my 2019 T4 late and apply for the loan program? So technically, yes. And I can tell you that we have done this already for one person. There are penalties. There's going to be a late filing penalty. There's going to be some interest penalties as far as the remittance on your source deductions. That part is definitive. Will you then be later disqualified from the loan or the debt forgiveness? I don't know. In addition, one of the things is because it takes some time for CRA to process the T4. So we can create a T4 for you relatively quickly and have that e-filed in a day or two. The issue is going to be how long does it take CRA to process it? Because based on my experience with the CEBA, this is they are cross-checking the T4 summary amount against your payroll account to determine if you are eligible. So they are disqualifying people, and if your T4 hasn't been updated and processed with CRA, you may not qualify. Now, you could certainly create the T4, make the application, you may get denied, and then make another application a few days or a few weeks or worst case scenario, a few months down the road once it's been applied. Are there some risks? I guess the greatest risk you run is that you may not be eligible for the debt forgiveness, but at least the good news is there doesn't seem to be any penalties associated with that if they come back and say, no, you've gamed the system by preparing a T4 late. Now, I have other accountants that I work with. I as many of you know, I have a podcast that I do with other accountants. I've networked with tens of thousands of accountants worldwide, and some of the top most brilliant accountants and bookkeepers that I can recommend. And I can tell you that other accountants and bookkeepers are taking a much more conservative approach on this, just saying absolutely, definitively don't do it. You are going to definitively get a peer review audit, which is possible. I wouldn't say it's definitive, but it's possible. Peer review is basically a payroll audit. And that they think that there could be significant penalties because CRA will be coming down on that. That's not my interpretation, but again, this is just that, an interpretation. Because we have dealt with this for many years with clients who are late and still need to create a T4 despite being late, which is, sort of the situation that you are in effectively. So that should not disqualify you from anything, in my opinion, but that is, like I say, an opinion. So I'm glad to see we've got so many questions coming through, and I will stay online right until we get through all of these. Still got about 20 more at the moment in the queue, so I will be continuing to go down this list. So if you haven't had your questions answered yet, just be patient. I will be coming through to them. If a family member is paid salary annually, can one employee director use wage subsidy while the family member use the CERB? Yeah, in theory, yes, you could, because the only thing is that you're not going to be able to pay anyone who apply for the CERB any payroll, certainly during this period, and potentially, we don't know yet whether they will come back and say, so let's say that I don't pay my son during March, April, and May, but then I pay him in June. Will they consider that gaming the system? I would think they might. So that would be the one thing I would be concerned about. I'd say commit to whatever decision you make, whether that's the CERB or payroll and the wage subsidy. And as far as could it be done for one family member and not another? Yes, certainly. The criteria really when it comes to the wage subsidy is that you have, when it comes to non-arm's length employees, that you have received payroll in the past and that you're not exceeding that amount. So, that to me is my interpretation of what the intent of the law is. And usually intent of law is really how it's enforced is enforced based on the intent. But of course, things can always come down to specific wording. So I am not a lawyer and I can't act like one. So that's my perspective on it. So hold these as just opinions and nothing more. If I use the CEBA loan to cover payroll to my family members' employees, will that make them ineligible for CEBA? And I'm assuming you mean make them ineligible for CERB, because they wouldn't be eligible for CEBA unless they have companies of their own. The one thing that I can tell you is that if you own multiple companies, they are allowing you to have multiple CEBA applications per company, per family. So if it really was CEBA versus CEBA, no issues there. If it is CEBA versus CERB, then yes, because you can't receive income and be eligible for the CERB. Okay, so again, related to my last question. Okay, I'm a small partnership business that has started in late 2018. For government loans, I won't be able to show that I have decreased revenue as I am so new that revenue has actually been increasing for me. So one of the things you might be able to look at is whether you can show a decrease from January and February to March and April. I don't pay myself a salary and never really have yet. And I regularly take money out when necessary for personal use. Managing cash flow is an issue. That's why I don't take a regular salary out. Is there anything that I could qualify for? Unfortunately, it doesn't sound like there is at this moment in time. One of the big things, I don't know if you've actually filed your first return yet. Just keep in mind that as you take money out, if it's not to repay loans given to the company, there is an obligation to declare that as either salary or a dividend. And many of our clients are in similar situations, and that's why they pay themselves annual payrolls as opposed to monthly payrolls. So it's not uncommon, but if you started in late 2018, it's probably time for you to bring in your first year's fiscal year end, and you should get that moving and get those finances together. It doesn't sound like there are any programs other than potentially the CERB, because you may be eligible for that. But if incomes are going up, these programs really weren't meant for people whose incomes are going up. These programs are put in place for people who have been wiped out. And I mean absolutely wiped out. I can tell you that we have clients who went to zero, absolute zero. No income whatsoever coming in. And for those of you who are independent consultants, maybe you're somewhat prepared for this because you know that at the end of each contract, it may not be renewed, and so you keep a slush fund. We also have small businesses like, we've got a salon owner, we've got a public speaker, we've got a whole bunch of different client bases, and for some of them, going down to zero has been absolutely devastating, and they truly need this support in these programs, and that's what these programs are for. If your revenue is going up during this crisis, you really shouldn't be taking advantage of these programs. They should be left for those who need them. If maybe they're up year over year, but down compared to what they were and what they should have been, then that's a different story. And again, you can look at comparing versus January and February. I am on severance for now. Why will I be able to apply for CERB once it's done? Yes, you will be able to apply for CERB once the severance is completed. Are all incorporated entities eligible to receive the CEBA, or do you have to prove hardship via lost income, canceled client contracts, etc.? And if eligible, how easy does it apply for the CEBA? What are the repayment terms all the way to the end of 2022? Yes, you do not, no, you do not have to prove any hardship. Pardon me. All businesses that had more than $20,000 of payroll in 2019 are eligible for the loan. And the repayment terms is zero interest all the way till December 31st, 2022. At which point I think it becomes if you don't repay it, it becomes 5% interest rate. If you do repay it by December 31st, 2022, and have used the money, used $40,000 for non-deferrable operating expenses, you are eligible for $10,000 debt forgiveness. So basically, virtually 99.9% of our clients should be eligible for the loan, which, I think I can speak to even for ourselves. We have certainly been hit from a cash flow perspective, nowhere near 30% or 75% drop. But, cash flow is running tight even for us because our operating expenses have not changed at all, but our cash flows have changed because no one's really bringing in their personal tax returns, and even the corporate tax returns, people are pushing those off till later. So while we've seen a hit, we've taken advantage of the CEBA ourselves. Whether we will qualify for the debt forgiveness or even apply for it, we will look at down the road. So I have self-employed incorporate. I have self-employed incorporate that pay only dividend to myself. Now my income has been reduced by 80%. Can I apply for $10,000 loan or any other benefit? So certainly some misunderstanding on this particular person's situation. So again, the CEBA don't have to have any losses. If you are incorporated, you're eligible for that. If you are self-employed, so there is a big difference between self-employed and incorporated. Self-employed is usually refers to a sole proprietorship. Sometimes incorporated people, we also call them self-employed because they own their own business. So if you're incorporated, which I assume you are because you're paying yourself dividend, then you're going to be eligible for this as long as you've, sorry, no, you're not going to be eligible for this because you only pay yourself a dividend. So you're not going to be eligible for the CEBA, and you're not going to be eligible for the wage subsidy, even though your income is going to be reduced. So you're not going to be able to apply for, unfortunately, any loan programs, but you should be eligible for the potentially eligible for the CERB if your income has dropped below $1,000 a month. So this is, there clearly is a group of people that I'm hearing more and more. It's the second person I've heard from today that they're self-employed but paying themselves as dividends, and as a result, they're not eligible for any of these programs, which is it's disappointing, and I'm sorry for you guys. All I can tell you is that I do have some lines into the government through various programs that we work with. I certainly do not write legislation or have very small impact on what can happen, but I will speak to all the people that I can to say, hey, we got to look at these people who've been paying themselves as dividends and have been paying themselves as a salary. But as it exists today, unfortunately, there's not really going to be any programs available for you other than the CERB. Can we pay source deductions annually and still claim CEWS for non-arm's length? This is the big question. I wish I had the answer. Like I said, my interpretation, and it's just that, it's an interpretation, is that based on the intent of what they were trying to do with this, which is prevent people from gaming the system, I think you should be. Now, in the application process, that might tell us some more information on Monday based on what information they're gathering. Like if they start asking us for the payroll remittance amounts from April and May of last year, we're probably going to start to become clear that they're really only looking at this from people who are paying monthly payroll. Again, I think this is one of those things that it was just overlooked when people were putting together these plans and these policies, because they didn't realize that so many small business owners pay themselves annually as opposed to monthly. And again, it's just like when we're dealing with CRA normally throughout the course of the year, when people get those payroll remittance reminders, that says, hey, why haven't you remitted anything? And then you just tell them, well, I have no employees with any eligible remittances during this period. That solves the problem. It's just that they're used to seeing payroll every single month, because when you are arm's length, it's not really okay for the employer to not pay the employees and not remit or withhold and remit taxes to the government on their behalf. So based on our interpretation, I think if you're paid annually and you divide by 52, I believe you should be eligible, but I don't know. That's just an interpretation. I can tell you, I know other accountants who are interpreting that you are not eligible. The only ones who are going to be able to tell us is the CRA auditors once it gets to that point. And of course, as we get into the application process and we start to see whether people are either approved or denied, because I think the application process will be the key to this, because I suspect people will start being denied at the application process. They won't even receive the benefit if they didn't have payroll in those periods, and they're counting those periods as the only way of doing it. I would find it very bad and very upsetting if the government gave you the funds, then turned around and said, no, now I want those funds back and I want a penalty because you're paying yourself annually. Now, if you game the system and you start showing huge increases and stuff like that, then that's one thing. But I can tell you, I know many a client who have lost their contracts and have no income coming in, and these programs were designed to help those people. And I would hope that they would not restrict you from that, but I don't know the answer to that. Can you mix CEBA and a CERB for director and family members? CEBA is only, it's specific to the company, right? CEWS, which is the wage subsidy, versus the emergency bank account, which is the CEBA. So CEBA is specific to the corporation. It's not specific to the individual, specific to the corporation. CERB is specific to the individual. Wage subsidies are specific to the corporation's employees. So again, somewhat related to the individual, meaning that if you're getting a wage subsidy, it means you're paying someone a wage, which means if they're receiving a wage and it's greater than $1,000, they certainly wouldn't be eligible for CERB. I think paying them under $1,000 and trying to get both is shady. I wouldn't recommend that. I think that'll land you in a heap of trouble, which technically, I think based on the way I'm reading things, you could do. I strongly would discourage that because that is getting away from the intent of what these programs are for. March versus March, April versus April, but I thought there was a cash message as well as CRA mentioned where March being 15% lower than January, February average. So there are a couple of different options. And again, what I would strongly recommend is going and looking at the CRA website. In fact, put it up. They have a couple of different calculation options that are available for you. So there are more than one way to calculate the 75% decrease. Sorry, the 30% decrease. I keep saying 75%, my apologies. And yes, you're absolutely right that for March, it's only 15% because it's really thought that the impact was only started about halfway through the month. So, you know, I would say if anyone is looking at trying to figure out whether they're eligible for the wage subsidy, spend some time on the site. I'm gonna maybe pop over there for a second. I have it up. I was planning to run through this because this is a great resource. And again, let me pop this into the chat if I can. Of course, my computer's freezing on me. I'm going to pop this URL into the chat window so you all have it. So this is the CRA site. It's where you can go to find out various programs that are available. This is all the information that is really truly valid, with the exception of, you'll notice that there really isn't any information around the new rent subsidy. So, you know, just information that's popping out in the news. Not anything on the website yet. But we've got, again, talking about support for individuals, Indigenous people, seniors, and then we get into support for businesses. And so if you look at the Canadian Emergency Wage Subsidy, they do have both a spreadsheet available for you to download to help with your calculations. They do have some sections in here on how to calculate your subsidy amount. And this will help you figure out the different ways between figuring that out and figuring out your eligibility. Or sorry, there is a section in here, I swear, on calculating the loss. Yeah, here we are. So calculate your reduction by comparing your eligible revenue by starting month of claim. So there are a couple of different options available here and some criteria on that. So if you're thinking about applying it, this is the place to go to get your information. One of the other things that I do want to point out, if we go back here, is one of the resources that I think is really amazing, actually. If you're trying to figure out what are you eligible for and what can you do, there is this link right here. Answer a few questions to get a personalized list of support. This thing is really actually quite amazing because it brings in all the programs and benefits that are available. You answer a few questions about your business and then you get an individual personalized list of all the different programs, not just the COVID programs, but actually all the programs that are available. So, and I'm gonna post this into the chat. And Jose, maybe I'll get you to post those links into the Facebook Live as well, because I think they are really great resources for being able to get some questions answered. Are you able to have a Q&A section on your website from this call, because Facebook and LinkedIn discussions are scrambled and hard to follow? Yeah, I think we could probably work on something like that. I'm open to doing that. It might take us a little bit of time to get that up, but yeah, I'd say yes, we could do something like that. As a single employee incorporated business, how do we prove that business loan was used to pay non-deferrable expenses when business account is still receiving income? This is my fundamental point, of what I was talking about earlier, with the fact that money flows in and out all the time. I don't think that they're going to actually need definitive proof that this dollar went over here. They're going to be looking for definitive proof that you have had at least $40,000 worth of non-deferrable expenses. So I think that is the key thing that they're going to want you to show down the road. They have not said how they will audit or what type of information they will be looking for. You will just have to we'll have to see as time goes by and how they're processing that. Are all incorporated entities eligible to receive the CEBA, or do you have to prove hardship via lost income? So we sort of answered this one. The answer is no. And again, repayment terms, nothing due and zero interest until December 31st, 2022. Is the TWS CRA page, in the TWS CRA page, there's no mention about non-arm's length or arm's length employees. I see it for the 75% subsidy, but not the TWS. Could you explain where the criteria is mentioned? I can. I'm not going to be able to find it while we're on the call right now. But Shamim, I do know you. I will send you some information on that after the call, because I'm just not going to be able to dig it up right here, right now. So I'll get that out to you. My consulting company has been incorporated for 7 years, and I have consistently paid myself as an employee every other week. Since March, I have not been able to find a new contract, so my incoming revenue has dropped by 100 compared to 2009. Yes, you are clearly eligible for CEWS. You are the exact scenario that they were looking for. So you're the one person that this worked for. So you're going to be eligible. Just obviously, you're not going to be eligible to pay yourself more than what you paid in the past. But you will be eligible for a wage subsidy of 75% of whatever you paid yourself last year. I started my business in 2019 and showed $15K as expenses when I filed my taxes this February 2020. So basically, I had a loss in my business. Am I eligible for CERB? One is the penalty for mistakenly applying for CERB and getting $2,000. And later on, if we realize we are not eligible. So you'll certainly have to repay it. There will also be additional penalties. I don't know what they are on that. I know I have heard the 25% penalty on the CEWS. I haven't heard what the penalty is going to be on CERB, but you will certainly have to repay it. There will be some additional penalties as well. Whether you're eligible, so it's not so much so the profit or loss of your business is not necessarily the same thing as your remuneration. The question is, did you receive any remuneration? Personally, did you receive any salary? And if you received any salary during this period, you're not going to be eligible. I would also say that if you're trying to, again, game the system where you have a company and you were receiving, if you're paying yourself annual salary and you're like, well, I'm just not going to pay myself from, March, April, and May and go on CERB. I guarantee there's going to be some problems on that. That's effectively fraud, right? And not okay. So don't do it. And the penalties will be pretty significant. But if you really, have seen a hit in your business, you don't have any income coming in, you were, earning or meeting the criteria for either received dividends or received salary or had any source of income in 2019, you're going to be eligible for CERB. So go ahead and you can apply there. If you put money received from CEBA into a GIDC, does that count as an investment? Yes. And if you don't have, certainly not going to qualify for debt forgiveness, that's for sure. If you just put it into a GIC and don't have the non-deferrable. But again, as we're talking about the flows of money, and if you've still got money coming in, you're still eligible for the CEBA. So the only question is really, well, whether you're eligible for the debt forgiveness. So you could certainly do that. Not a very good use of your money, but I don't like and again, certainly not the intent of what they were trying to have you use it for. And it does say that it's supposed to be used for that. And it is a covenant. So, I think you could. I don't know if I would is maybe the ultimate answer. So to confirm, if a business owner, just my wife and I, pay myself only in dividends, have had company revenue drop by 50%, and soon to be more since March, we do not qualify for the 800 and something a week. Correct. Unfortunately, I'm sorry to say that is correct. Can I explain how the CEWS program works? Yes, so the CEWS program is a refund that you'll get, or a check you will get from the government. You have to apply for it, and you have to demonstrate a few key pieces: that your revenue has dropped by 30% or more in April, 15% or more in March, then 30% more in April or May as well. If you meet those criteria, then you would be potentially eligible for a refund of 75% of the payroll, up to a maximum amount. And the maximum amount is dependent on whether they are ineligible or whether they're an arm's length or non-arm's length employee. And again, best thing to do is first read this this section here on the website. Why can I not find support for businesses right now? There we are. So the Canadian Emergency Wage Subsidy brings this into complete detail, which is going to be hard to go into considering we're already running 10 minutes long at this point. But this will give you, it's up to $847 per week is the maximum amount here, which is obviously a little bit more than the $500 a week effectively that you're getting with CERB. And then again, there are some caveats that if you're a non-arm's length, it can't be more than what you were paying yourself in the past. So my number one tip, go to this website and take a drill down. If you have more questions, again, submit them into our COVID-19 at CPA for IT support line. If my non-deferrable expenses are about $20,000, how much of the 40K loan do I have to pay back without interest? So it's not it doesn't seem to be any kind of prorated thing. It just seems to say that it has to be used for non-deferrable operating expenses, and that's the criteria. So my understanding is that you got to have $40,000 worth of operating expenses over the course of these 2 years in order to qualify for the 10,000. And it's not like if you have 20,000, you only have to, you get $5,000 debt forgiveness. It's all or nothing is my understanding of it. T5 versus T4 is really killing us. I know many single owners were taking just dividends. We were following a different vehicle for paying taxes within the law. Seems like the government has abandoned this group. Is there any way we can raise this to our government collectively? You know, I agree with you. I mean, it's been, you know, a completely overlooked group. I'm, you know, not a huge fan of Morneau and this government, the way that they've been treating small businesses over the last couple of years. Anyone who knows me knows that. You know, I think what they did around dividends, you know, a year and a half ago was disgraceful, but it happened, and they seem to look at dividends as a way people are cheating the system or whatever you want to call it. So this government has not treated business owners who are paying themselves in dividends fairly, in my opinion, even though through the theory of integration, whether you pay yourself salary or a dividend, there's no real difference in tax. The government's getting their same pound of skin, whether you take a dividend or a salary. So why are they treating that on, you know, differently now? How can people work together? I'd say the number one thing is you've got to reach out to your MPs. You know, that's the number one thing. Reach out to your MPs. Talk to any other business owners you know. Have them reach out to their MPs. If the MPs don't know it's an issue, they can't raise it and share that information. That's the big thing you can do. I can tell you we're working with our lobby groups that we are connected with. If you're connected with any lobby groups, share the message, sing it from the rooftops. Let everyone know that there's a group of people who have been missed out by the support the government has put in place because of a legitimate tax strategy that was used in the past. Okay, got another company here from, or another question here from Facebook Live. Would paying a consultant to the company that you have in both 2018 and 2019, their consulting fee, but they are family, a non-deferrable, not non-transferable business expense? I think it would be, you know, if it's definitely gray, if not dark gray. But I mean, if they're doing work for the business and they're doing consulting work for the business, and it's you know, it's in line with what your operations are doing, then that's a non-deferrable business expense. Just like if you think about it, like a more traditional type of business, let's say, you know, take for example my dry cleaning lady, who actually has an outsourced consulting company that she uses to come and pick up the dry cleaning and drop it off. That's definitely a legitimate operating expense, non-deferrable operating expenses that she needs to operate her business. So I think to that extent that, you know, these are legitimate consulting fees, and yes, they're going to be non-deferrable operating expenses. I have a self-employed corporate that I pay only dividend to myself. Show my income now reduced. I think we answered this one. Yeah, Jose, I think this one ended up coming through in the questions. So we'll, I think that one's been answered. Basically, if you're pay yourself only dividends, now your income is reduced, can you apply for the loan now? We're down to our last three questions, folks. So thank you for those of you who have stayed with us, and we've still got a big group of you with us today. For non-arm's length annual salaries, would you agree that applying for CEWS after your financial year end of the corporation, after you prove your annual payroll and revenue drop, is the safest way to avoid an audit? At this point, yes, I would. What is the recommended process to take money out of the business loan, like withdraw $5,000 every 2 weeks? So what is the recommended process to take money out of the business loan? Like, I'm assuming that they're talking about with the CEBA, and how do you withdraw that money? You know, I probably wouldn't. I would actually just use it for the actual operating expenses of the business. I think you certainly run a risk of having some problems if you take this business loan and then withdraw it for your own lifestyle expenses. That's not really the intent. So I'd be cautious not to do that. I would do my best to use it to pay for things, even if you end up paying for things that are quote unquote non-deferrable, like if you're you know, things that haven't qualified for this. Because I think that I'd rather see you do that than take the money out of the business. I'm not encouraging that in any way, shape, or form. If we want to return back the $2,000 to CRA now, which I mistakenly applied for, do I have to still pay a penalty? I am not 100% sure. I'll have to do some digging on that. Again, can you forward that question into our support email account, the COVID-19 at cpa4it.ca, so I can reply to you individually? I'm not sure. Unfortunately, I don't have an answer to that. Oh, we got one more. Would paying yourself a weekly salary be considered non-deferred? Yeah, I think the salaries do qualify for this. Just not payroll, interestingly enough. But my understanding is salaries do qualify for this, is my understanding. I could be mistaken, but yes, I don't recall seeing anything about any arm's length versus non-arm's length when it comes to doing that. And again, I'll follow up with some of my accounting contacts to see what their different interpretations are. The $40,000 is for expenses in the year of 2020 or 2020 and 21, so essentially 2 years of expenses. I have been interpreting that as for the 2 years, but it doesn't say. It just says it has to be used for non-deferrable operating expenses. Again, we may get some clarity on that in coming weeks. Because what happened, I can tell you from my own experience, is the money was just full on deposited into my account. So again, how do you differentiate between, as someone said earlier, like that money deposited from the CEBA and the money that I was received from income that I'm still generating? There's really no way to do that. So I think my understanding of this is it's going to be over the 2 years. But again, don't hold me to that. But that's certainly my understanding at this moment in time. Can you still take dividends in addition to payroll even if we have CEBA? Correct. Yes, you can. So the CEBA does not like, in order to qualify, you have to have payroll in 2019. It doesn't care if you have payroll in 2020 or if you shift. I do have one specific client I was talking about who actually the nature of their business has shifted, and they will not be taking salary in 2020. They will be taking dividends, and they would still technically qualify for CEBA. So there's nothing to say that you have to have payroll in 2020 as well. And also, if you had a combination in 2019, you had payroll and dividends, as long as you had 20,000 in payroll, you were eligible. Well, okay. I think we are through everyone's questions. Again, a couple of key sites I want to make sure that people go to. We've shared those links in the thing. We'll probably follow up with an email because I know we had a lot of attendees. We will, again, be, as I said, doing our best to keep all of this information up to date in our Facebook group. So if you're not already connected with us on our Facebook group, please reach out. It's facebook.com/groups/the Self-Employed Support Network. I see we might have some, we've got some things going on in the chat, which I have not been monitoring. I've just been going through the Q&A. So let me just take a quick look at that. And if there's no other questions, again, we'll see you on Facebook. And if you think of a question after this and want to send it in to us, send it to our support email, which is covid19@cpa4it.ca. So I do see a question in here, but I think it was an asked and answered. So I figured out the Q&A. I registered business, sole proprietor, self-employed only. Yeah, so this was asked and answered. Asked and answered. Yeah, I believe all the questions in the chat were asked and answered in the Q&A. If someone feels like their question was not asked or answered, oh, we got one more. Says to apply for the $40,000, you must have had 20 to 1.5 million in payroll. Does payroll count if it's dividends? No, dividend is not payroll. So you must have had a T4 in order to qualify for the $40,000 loan. They will ask you for only two pieces of information when you apply for that loan: your payroll account number and the box 14 from your T4. So if you don't have a T4, you're not going to be able to apply. Awesome. Well, thank you, everybody. We will be doing, the goal is to try and do a weekly webinar every Friday. I know Jim Harris is planning to come back probably in a couple weeks. I've got, as many of you in the Facebook group know, my brother-in-law, Roderick Slavchev, is working on one of the, I can't think of the word right now, but he's in biotech and farm, and he knows a lot more about the actual the disease. And I might be bringing him on to talk about his work that he's working on at Waterloo. I thought that might be interesting, not related to tax at all, but might be interesting. I'd love to hear from you guys as well. Who else you'd love to see? What other information you'd like to hear about? You know, we want to keep this Facebook group going for you guys and make sure we've got the content and the messages that are applicable. And we can't do that without feedback from you guys on what you need. So thank you guys for sharing. Thank you guys for dialing in. I hope you have a great weekend and stay safe and stay healthy. Bye for now.